I had a younger dentist reach out to me and he said, Jeff, you've been practicing for about 20 years. If you could go back to your younger self, what would you do differently as far as investing? And in this video, that's exactly what we're going to discuss. And if you're new here, I'm Dr. Jeff Anzalone, a periodontist wanting to get you out of the rat race by replacing your expenses with passive income. If you're new about that, don't know much about it, download the free passive income guide. I'll put a link below this video. So let me give you a little visualization of where I started from. So I finished all of my training at the ripe old age of 30. Dental school, hospital residency, surgery residency. So I was about 30. And we were, I'll draw a little timeline down here, 300,000 student loan debt. I had a job offer here, kind of got screwed out of it last minute. So I had to start my own practice. And at this time, we had a 2-month-old. We'd already bought a house, interest only. Didn't have a clue what to do. But at that time, we knew about one kind of financial guru, and that's DR, Dave Ramsey. He was big on the debt snowball. Start off with your smallest debt, pay it off, then take all that extra money, go to the next debt, so on and so forth. So all the way down to 8 years, when I was 38, we were debt-free, including the house. Now, this was a great feeling, as you can imagine, because we had worked the process, going through all of his baby steps, and along the way, we'd set up emergency fund. We had a simple IRA, like a practice IRA for my wife and I. So we were able to put away about 30 grand-ish a year, something like that, with the simple IRA. So let's, plus some other stuff. So let's just say we had roughly 300K in the stock market. Okay, 300K in the stock market. So you're probably looking at this going, man, that's great, Jeff. You're 38. You got to pay for a house. You're debt free, and you got 300 grand. Plus you got let's see, my kids at that time were 8 and 6. You got it going on, right? Wrong. Because if you know anything about my story, two years later, when I was 40, I had a snow skiing accident. Yes, I don't know how to write very well anymore because I type a lot. Sorry about that. But snow skiing accident hurt my wrist, and that was my wake-up call to, if I can't use my hands, I'm not able to provide for, at the time, a 10 and an 8-year-old. But then I was thinking, well, wait a minute. Nobody ever taught me about this in school. They said, the financial advisors and all that, they said you get out and you're 30 and they want you to work until you're 70. So they want you to work for 40 years. Okay. So to answer the original question, if I could go back right here, knowing what I know now, this is what I would have done differently. And it all stems from reading this, Rich Dad, Poor Dad. And pretty much any successful real estate investor, they started with this book, Purple Bible. And it has some information in here, but the main thing it has in here is about the cash flow quadrant. But he also talks about why the middle class struggle. And now that I have this information, let me spit it out to you. This is what I would have done differently. So you got income, you got expenses, you know what those are, right? And then you have assets and you have liabilities. So on this traditional path, I'm going to call it the slow lane, okay? DJ DeMarco, in his books, he calls it the slow lane. We have to work to make an income, okay? When I got to this point, debt-free, 300K saved up, but guess what? The only money coming in at that point was from me, yours truly. I was the only source of income. Dave Ramsey didn't teach me about that. Okay. He just said, hey, get to this point and then continue to work and you don't have any debt. But what about if something happens like my accident? Or what if you're sick or you're injured or something, you can't work? That's what I'm here to teach you about. Okay. This is what I wish I'd have known going back to college. So the typical poor middle class, this is what they do. We work, we make an income, right? Then we have expenses, car, house, whatever. And what typically happens is we'll take our income, we'll buy liabilities. Cars a liability. Well, let me explain the difference. Asset, easy. Asset puts money in your pocket. Liability takes money out of your pocket. So let me ask you this. Is your house asset or liability? What have we been taught? You know, the financial gurus say, oh gosh, yeah, the American dream, get out and get a job and get a good job and start a family and do what? Buy a house. Do whatever you can because that's your best investment. I had a paid for house. But here's the thing. I don't own the house. Even if it's paid for, you're like, well, wait a minute. Yeah, you do. You don't have a mortgage on it. I don't. But guess what? If I don't pay the property taxes that year, guess what? The government will come get your house because they own your house. You just borrow it. You ever thought about that? Miss paying your property taxes for a year and you see what happens. They'll sell it. Okay. So that is something to definitely think about. The thing is, does your house, is it an asset or liability? Does it put money in your pocket or does it take money out of your pocket, which is a liability? Probably more than likely it takes money out of your pocket. Expenses, maintenance, yard work, taxes, insurance, all that stuff, right? Unless you are renting out rooms, unless you're have a short-term rental part of it or whatever. Unless it's putting money in your pocket, it's a liability. Liabilities produce these expenses. Mortgages, cars have got to pay for gas, got to pay for taxes, insurance, maintenance, oil change, all that. That money goes out. You work to buy liabilities, which pays expenses, and then maybe every now and again you'll take your income, maybe you'll put it like in a 401k or something like that. But here's the thing, we're on this path, and when I got to this point right here, when I was 38, I could not touch this money until what? I'm 59 and a half. How's that going to help me now? I'm 38. I'm like, okay, well, I got to work another 20 plus years to even get my hand on my money. What if I don't want to do dentistry or whatever you're doing for the next 20 years? Dave Ramsey didn't teach me about that. Kiyosaki did. Now I'm teaching you. Hopefully you'll pay attention. Okay. So what can we do? Well, this is what I would have done. This is what I'm doing now. This is what I've done differently. You gotta know what your expenses are right now. Let's say you get out of your training or whatever you're making right now. Let's say you make 200 grand a year. Okay, you got a good job making 200 grand a year. Well, you're gonna pay 40% in taxes, right? So you got 40 grand. Let's just make this easy. Let's say you got 50 grand in taxes. So now you're left with $150,000. All right. Hopefully you live a little bit below your means. Hopefully you're not spending 150 or like what most Americans do, spend 170 a year making 150. Let's say you're smart with your money, and let's say you spend 110 a year. So now you got 40 grand left over to do something. Okay. This is what I want you to pay attention to right here. You want to figure out a way, if I could go back right here, okay, I would figure out a way to get something, not me, but get something else to pay my expenses. Where you're like, well, what are you talking about? Well, you could have cash flowing businesses. You can buy other medical practices, dental practices. You could buy real estate. You could do either active. You want to go out and buy property. You could do passive. You could do all kinds of things. But don't really get bogged down in what you have to do. Just get to the point to where you understand, get something, cash flowing, appreciating assets to pay for your expenses. Okay. So now when we redraw what we just talked about, so here's your income, here's your expensive, here's you right here, you're making the money. Then you have assets, you got liabilities. So instead of the typical income putting on, because most people, they're making 200,000 a year, what are they going? They're going out and they're buying the cars, the boats, the side-by-sides, the houses. Well, you start doing that and it's like, well, you're going to be working till you're 70 or longer. I was on this trajectory, okay? But now take this income, buy assets that are going to pay the expenses of your liabilities, okay? So now instead of you can get out of here with trading time for money. And now you've got property or whatever else, that's your income source that is going to pay the expenses instead of you. It's not difficult. It is a money mindset shift. I can't tell you how many people, myself included, have been freaking brainwashed that we have to work until we're 70. People will come to me every single day and they'll tell me, Jeff, I want to be able to in 10 years where work is optional. I want to have free time, this and that. And I say, okay, that's great. And I say, all right, so we'll come up with the expenses. We'll come up with extra income. And then they're so brainwashed, they don't even know it. They go, well, then I'll start talking to them about different things that they can invest in. They go, well, wait a minute, I've got to max out my 401k first. And that just goes to show you, we are so brainwashed that we have to do it. I said, look, you came to me telling me you wanted financial freedom. You wanted to go east, but everything you're telling me, you want to go back west. You're wanting to go to the beach, yet what you're doing is taking you to the mountains. Oh, I didn't realize that. Hopefully you will wake up and you'll realize that. Is this the only option? No, I'm giving you another option. Okay. If you want to work and you want to hope that you still have a job, you want to hope that you have health when you get to be, I mean, I like snow ski. As you can see, I like snow ski. Well, do I want to wait, clip coupons and everything else and wait till I'm 70 and get a hip replacement and a wheelchair or knee replacement to go snow skiing? No, I want to go snow skiing now when I'm healthy. I don't want to deprive myself and hope when I can't tell you how many people that I know that did not make it to 70 that were way healthier than me or as healthy as me. You never know what tomorrow holds. Okay. So that's why I said, if I could go back, I would replace my expenses as quickly as I can with something other than me. All right. So then now when my kids were 8 and 6, had I been doing all this, because between the ages of 5, when your kids are the ages of 5 and 13, those are the best years you'll have with them. Why? Well, they're not going to, from 0 to 5 or 4.5 or whatever, they're not going to remember anything. If you take them to Disney World at 2, they're not going to remember that. They'll start remembering at 5. And then after 13, 15, 18, they really don't want to be around you much. That's life. They want to be around their other friends. So you want to focus on this time right here when my kids were 6 and 8, could have focused on that more. Spending all their time then, and then when they're out, it doesn't really matter after that. Okay. This is coming from 20 years of practice. This is coming from having 2 kids. One just moved out in college. So I'm telling you this on my experience. And hopefully you will, if you do a change like this and you have something, I encourage you, if you have something that helps you, that can help somebody else, do this. I'm just standing here in front of a web camera talking to you. This is just a cheap whiteboard. Okay. You can call somebody. You can, take your phone out, do a video, write an article, whatever, or just go to lunch with somebody that, I'm always taking new dentists and new physicians that come into town. I'll go to lunch and I won't be talking to them about, oh, well, we do this and that, and we need you to send me patients. No, I'll talk to them about this. This is more important. I don't care about all the other stuff. I don't want you to make the same mistakes I had. I want you to have plenty of free time for financial freedom. Do me a favor. If this video helped you, hit the like button. I know you've got somebody in mind that could benefit from this. Do me a favor, hit the share button, send it their way. I'd appreciate it.